Atul Tiwari, who's the head of Industrials and Electronic Utilities and Infrastructure Research at JP Morgan. Now, Atul, always a pleasure to welcome you on NDTV Profit. First of all, the capex cycle growth is very, very critical for infrastructure development, and we have seen some slowness in that. How are you seeing the status, as well as what is the projected outlook and factors behind it for the next year?
So as far as government capex is concerned, after pretty healthy growth between 2021 and 24, over past 1 year, we have seen some consolidation. And from here onwards, we do think that the government capex should be able to grow, in line with nominal GDP. This year, actually, year-on-year growth is quite strong so far, but that is because of low base of last year. The key event here will be the budget session, and we do expect the government to pencil in capex growth in line with nominal GDP growth next year. As far as private corporate capex is concerned, that too has slowed down over past 1 year, and right now our sense is we are bottoming out. Government has given consumption stimulus over past 6 to 9 months, and that is reviving demands in some of the key sectors in the economy. And the expectation is that next year, as this demand picks up, corporates will also come forward and start increasing capacity, and that will lead to private corporate capex bouncing back to low teens kind of handle. So that is the expectation as of now.
Big expectation there, Atul. Private sector capex cycle to bounce back is a big one, and we need that. Now, power demand, that has seen a dip in certain categories. How has it really shaped up, and what is the key trend that is visible for the next year when we look at the power and utility as well as alternate energy space?
Yeah, so on utilities and alternative energy, over past 5 to 8 years, we have seen quite a bit of growth in terms of installed capacity added and capex being incurred. And this has happened both on the thermal side as well as on the new and clean energy side. And a lot of it has been driven, by very supportive government policies. However, again, over past 1 year, we have seen power demand being slightly weak compared to expectations. And as a result of that, the demand for solar power has reduced. During the days, we have enough power, and the system has now changed to ordering out solar plus BESS kind of projects or FDRE kind of projects. So those projects will keep happening, but the demand for pure solar project, is weak. To cater to peak power deficit during evenings, India has also started ordering out new coal-based plants, and a lot of coal-based plant ordering has happened, and we are seeing more ordering going ahead. So from here onwards, we do think that hybrid solar plus BESS and FDRE type of projects will keep getting ordered out, and some more coal-based capacity will get ordered out. Overall, we do view a power opportunity as a pretty structural growth opportunity over medium term, despite some hiccup in terms of weaker power demand and very short term.
All right, some weaker power demand in certain categories is a worry, but the nerve center of power sector there, Atul, is also the transmission space, and we have seen several projects getting delayed on execution. How are you seeing the transmission projects execution for the next year? Are the bottlenecks sorted?
Yeah, so I think the context is important here. Last year, the pace of award of transmission projects in India was very high. And obviously, when you are awarding so many projects, execution does take some time to catch up. This, along with the fact that there have been rights of way issues for some of the larger transmission projects, with the farmers demanding, higher compensation, has led to a little bit of a slowdown in execution. However, now new government guidelines have been put in place where the compensation for right of way to the farmers has been increased. As it happens, it does take some time to roll out these guidelines on ground. So it is taking some time, but we think that this is a pretty short-term phenomenon. And over next 2 to 3 quarters, we think that most of these issues should be resolved, and rights of issue right of way issues will be behind us, and the execution will pick up for the transmission sector as well.
Right, so transmission bottlenecks could be in the past. It could really limp back, but defense sector has lost its flavor in the last few months on the markets. Does it continue to be a promising sector for years to come? What's your house view?
So we view defense space in India as a very strong structural growth opportunity. This is being driven by the geopolitical necessity, the government policy, as well as increasing allocation towards defense capex. And we do think that over next decade or even 2 decades, India's defense capex will keep growing easily in the base case at 10 to 12% CAGR and possibly even higher. And the companies which have right set of capabilities to tap into that opportunity will grow faster than that. And that will happen because government is laying a lot of emphasis on substituting imports with domestic manufacturing of defense equipment. So the structural opportunity is definitely there, and we continue to remain very positive on that space. Very near term, we do think that because stocks have done quite well this year and actually over past 3 to 5 years, over past 1 or 2 months, there has been a bit of a profit taking, in some of the individual names, and that actually, to our mind, makes valuations even more comfortable in this sector, which is poised to grow structurally.
Right, so defense sector valuation is now looking a lot more comfortable. Atul, that's a big takeaway. And the second one is also the industrials valuation look rich. What's the right valuation that we are looking at, and your view on this space as well?
Yeah, so on the industrial part, we have a fairly neutral view. In part because we do think that the slowdown which is happening right now will take some time to be behind us. While we are also positive on capex growth over medium term, but we do need to see a few more data points, for to become much more constructive on this space. As far as the broader valuations in the industrial space are concerned, yes, I mean we do think that for most of the names, valuations are still on the richer side, and as a result, we have neutral or underweights on many industrial names.